Hello and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXPInvest. And like every week, we will explore the charts of Nifty to see what it can tell us about the coming week's activity. So, based on previous week's activity or the activity gone by, on this daily time frame, I am seeing that the Nifty has on the RSI 25 period of Nifty's daily time frame has taken support at the level of 40, which is good. This is the first part of Nifty respecting the positive range, that is the bullish range. The next test will be that if this rally does continue, is the RSI able to cross above the level of 60, number one, and number two, this high over here, that is the level of around 24,800, whether or not this is sustainably breached on the index or not. This is going to act as a major resistance for the index. Going down to the 75-minute time frame. On the 75-minute time frame, I can see a positive divergence here. This positive divergence to some extent has been realized with a rally. Now, this rally that you're seeing has covered the gap that was formed on the 18th or rather the 19th of December. But what you will also notice and is important is that this was a twin gap. Basically, back on 25th of November also, the same zone experienced the formation of a gap up. So this was a no trade activity. This gap was filled and the rally continued. Now here the thing is that this gap again has been filled, but this time it's not a rally, it was a downward facing gap. So whether this rally that we saw was only to fill up this gap or is this the beginning of something new, that remains to be tested. The 75-minute time frame is not giving us any solid signal right now, because if you look at the RSI 25 period, it has taken resistance at the level of 60, which personally makes me uncomfortable. Also, if I extend this gap zone, you can see that it has acted as a resistance on Nifty, which is not very encouraging immediately. So if Nifty does manage to overcome the resistance around the level of 24,200, the next resistance that it needs to overcome would be 24,800 to actually establish itself in a winning rally. The 15-minute time frame is showing a positive range shift, but then again the 15-minute time frame is a very short time frame to really plan anything and consists of a lot of noise. So here the real test remains to see whether on 75-minute time frame we see another leg of rally which takes us to the resistance of 24,800 and whether or not we are able to sustain above that. Moving on to Bank Nifty. Bank Nifty's chart analysis is giving better indications than the Nifty's analysis did. On the 75-minute time frame, there is a strong positive divergence as I have drawn, and I expect the Bank Nifty to give at least a short-term rally which can take it to 52,500. On the daily time frame also, the Bank Nifty is in a strong positive range shift as highlighted with this black line, which is indicating that the underlying momentum on Bank Nifty continues to remain quite strong. Moving on to the auto sector. The auto sector's daily time frame has established a positive divergence, and the RSI 25 period on daily chart has moved or created a higher high, but the sector itself is yet to create a higher high here. Once it does establish the higher high, I would take that as a confirmation to dabble or swing trade in the auto sector stocks, but until that happens, I will wait. The commodity sector, even though it is showing a positive divergence, the price activity is not yielding a lot of positive outcomes because the 75-minute time frames RSI is still in a negative range. As we can see, the RSI has spent considerable amount of time below the level of 40, which is not very encouraging, and the price itself continues to form lower lows, which is significantly discouraging. Commodity sector, I would say you want to stay away from for the time being. Consumption sector, on the other hand, is looking quite positive because there is firstly where the bottom was forged on the consumption sector. The 75-minute time frame indicates the beginning of a new bull run with a positive divergence. This resistance at the level of 11,600. This resistance has already been overcome. Now, whether it will sustain or not is a question, but if you look at the 75-minute time frames RSI, it seems to be ready to move into the bull range. Now, if you also look at the daily time frames RSI on the consumption sector, then you can see the RSI index is respecting the level of 40. Now, as this rally continues, if it does, and the level of 60 gets breached and sustained, I would say that the consumption sector is back in rally. And if you remember, before this correction that started in the month of September, in the month of October rather, before this correction started, the consumption sector was in a very strong rally. So if this high can be sustained, I would expect the rally in the consumption sector to continue. Moving on to the next sector, the energy sector is also showing positive divergence, but to be honest, I would like to wait for more confirmation here because the 75-minute time frame is in a strong negative range. I want to see the energy total index to sustain above the level of 38,000 before I start committing capital to the individual stocks, because this sector can be particularly volatile. CNX Finance looks quite positive. It is moving upward. It is moving in an upward trending channel, and it seems to have taken good support at the lower trend line and is ready to head higher, also indicated by a positive divergence on the 75-minute time frame. The daily time frame RSI is also respecting the bull range, and I expect the rally to continue in the finance sector this point onward. FMCG sector, I think the FMCG sector has given a pretty strong correction over here, and it has found support near the level of 55,500. The daily time frame is showing a strong positive divergence, and so is the 75-minute time frame. I expect the FMCG sector to also show some rally. Individual stocks like Marico, Dabur, Hindustan Unilever, they've started to show positive indications on charts as well. But in FMCG stocks, instead of individual stock picking, because it's a pretty slow moving sector, I prefer to go with the ETF route. So there is a FMCG ETF by ICICI Prudential that you might want to invest in. Next, we come to the infra sector. The infra sector has so far given a 50% indication of a positive move by way of respecting the level of 40 on the RSI daily chart, but it is yet to sustain above the level of 60. So until that happens or a higher high is established, and actually I would like to see both of them happen before I start committing money to the infra sector because of the high volatility in this sector. Next is the IT sector. Now on the IT sector chart, I am noticing the formation of a negative divergence, which tells me that any rally which may take the stock to retest this previous high should be treated with caution. I might be interested in the IT sector if this high gets breached, but for this little bit of upside, I will not risking getting caught in this massive downside. The CNX media sector continues to look pretty bearish, so we will stay away from that. The metal sector has also breached the level of 40 on the daily time frame and is forming consistent lower highs and lower lows. It seems to be in a downward trending channel, so it's better avoided for the time being. The pharma sector, if you look at the chart, it is moving up in an upward trending channel, and it also appears that this upward trending channel's support trend line has just been respected and the index has started to move up. Even the RSI is very respectful of the level of 40. Pharma continues to look quite attractive. PSE sector, it has recently violated the previous low, establishing a new low, and it has been creating a series of lower highs. I would say it's better to avoid the PSE sector, and if you're holding any PSE stocks, the next few percentages of rally that you might see, 9 to 10% rally, even though you might be sitting on losses in your current PSE stocks, it's better to get out because we never know until when PSE sector is going to continue to correct. Banking sector also is looking quite attractive, just like the private banking sector index. Higher highs have already been established, higher lows have been established, the level of 40 has been respected, and I expect the rally in this space to continue. So even for PSU Bank, making individual banking picks is quite difficult. I prefer to invest in PSU Bank ETFs to make a more broad selection and avoid behavioral biases. Next, coming to the realty sector. Now, on the realty sector, I think the daily time frame is showing a negative range shift on the RSI, which indicates negative momentum or bearish momentum. So, for the time being, I will avoid the realty sector as well. The service sector has honestly been in a pretty strong bull run, and even during the correction, it did not break its previous low at any point of time, which is an indication to me that the bull run continues to remain intact. And since the RSI on this daily time frame has also not breached the level of 40, even though it did resist the level of 60, until proven, I think this rally is still healthy. Consumer durable. So on the consumer durable sectoral index chart of 75-minute time frame, a positive divergence was noted back in the mid of November. Since then, we've seen a strong rally. Now, the high of this rally has already been breached with a new high, and the RSI of 75-minute time frame, RSI 25 period of 75-minute time frame, is also in a positive range with a positive divergence. So I think strong activity can be expected there. Pharma and healthcare sectoral charts are typically very similar to each other, and here also the indication is almost exactly the same as it was for the pharma sector. I'm expecting good upside activity in the healthcare sector as well. So with that, I come to the end of all indices, including Nifty and sectoral indices that I wanted to discuss. I hope you found this discussion useful. If you did, please don't forget to leave a comment on this session, and I will see you again next week with the next market outlook. Until then, happy trading.